Hello all, my name is Jacob Kello and my company is CleanSpark Incorporated, ticker CLSK on the New York Stock Exchange. CleanSpark Incorporated is an American energy software and control technology company that offers software that allows users to optimize their energy usage. These services include energy and controls, microgrid design and engineering, microgrid consulting services, microgrid implementation services, and energy-efficient Bitcoin mining. The company's main source of revenue comes from their Bitcoin mining segment. CleanSpark was founded by S. Matthew Schultz on October 15, 1987, and is now run by CEO Zachary K. Bradford. The company is headquartered in Bountiful, Utah. Cryptocurrency, a decentralized and digital form of money that utilizes blockchain technology as a verifier of transactions. Cryptocurrencies have proven to be a lucrative investment opportunity in recent years and continue to be attractive moving forward as many analysts project the market size for cryptos to nearly double by 2026. Bitcoin, what most consider the original cryptocurrency, was valued at around $650 per coin in 2016. Today, one Bitcoin is worth over $55,000, and interest in cryptos is showing no signs of slowing down. Bitcoin utilizes a process called mining, which validates each Bitcoin transaction on a blockchain network and then adds them to a distributed ledger. This process prevents the double spending of digital currency and is an effective way of obtaining coins. This process, unfortunately, emits copious amounts of carbon dioxide and is considered to be a danger to the environment. CleanSpark Incorporated, an energy company that specializes in microgrid solutions, has been taking advantage of the mining process by utilizing their microgrid technology to mine Bitcoin in an energy-efficient manner. The company utilizes their microgrid solutions to ensure that the most cost-effective and environmentally friendly mining processes are used. CLSK relies on clean, alternative power generation, like solar, for friendly mining for more than 90% of their operations. Not only is this process better for the environment, but the alternative power generation sources are far cheaper than using traditional energy grid-tied resources. CleanSpark reports that it spends only $6,000 per Bitcoin mined, and with Bitcoin's average price in 2021 of $47,000, this new line of business has the potential to make CleanSpark into a future multi-billion-dollar company, with these strong margins as they expand their mining capacity. Bitcoin mining is a new line of business for the company this fiscal year, and it currently makes up 72% of the total revenue for the company. The company's other focus sector, energy, results in the remainder of the company's revenues. The energy sector of CleanSpark provides advanced software, controls, and microgrid solutions that help solve modern energy challenges in the residential, commercial, and governmental markets. Due to the company's energy-efficient Bitcoin mining and its microgrid solutions, it is recommended that CleanSpark be added to the AIM Small Cap Domestic Portfolio at a price target of $33.99, representing a 136.72% upside. Bitcoin mining, on a very general level, is the process of verifying the blockchain of each Bitcoin transaction. CleanSpark currently has a capacity of 70 megawatts, which is yet to be fully installed. When CleanSpark reaches full capacity, which the company expects to achieve by the end of 2022, the company expects to mine over 27 Bitcoins per day. Using the CME's group's Bitcoin futures data, the average price of Bitcoin by December 2022 will be around $59,000, meaning that if they are able to operate at full mining capacity, CleanSpark can expect over $700 million in revenues for just this line of business by 2023. Mining has an adverse environmental impact due to the large amount of energy needed to mine Bitcoin, making this process a major contributor to climate change. According to Reuters, Bitcoin mining is projected to produce between 22 and 23 million metric tons of carbon dioxide emissions per year. CleanSpark has revolutionized the Bitcoin mining process by using their microgrid technology that utilizes the cheapest source of energy available. CleanSpark claims that over 90% of their mining process is done with clean, alternative energy production processes like photovoltaic, solar, and wind. while they continue to strive towards using 100% carbon-free energy. Since the company's alternative energy options are far cheaper than oil and natural gas, the company's cost per Bitcoin mined is only about $6,000 per coin and is reportedly decreasing, giving CleanSpark a clear path to profitability utilizing this high-margin line of business. CleanSpark provides its customers with advanced software controls and microgrid solutions that help solve modern energy challenges and improve energy efficiency. The company's product offerings act as a medium between microgrids and typical grid power generation by utilizing clean microgrid energy when it is most cost-effective. The energy sector of CleanSpark currently contributes to 22% of total revenue, which totaled $5 million year-to-date. Energy revenues have increased 61% from the previous quarter, which can be largely attributed to the residential lines of business. All new homes built in the state of California are required to have solar panels attached to the house, meaning that all of these homes must have microgrid access. This has proven to be a substantial driver of revenue for CleanSpark, as the company expects this sector to become profitable in the coming quarters. The company had an activism campaign against it by a short seller of the company, Kello Research. News of the activism campaign in January 2021 originally caused the stock to drop a little over 9%. Kello alleged that the company is an insider enrichment scheme that vastly overstates the elements of the business, but CleanSpark settled a lawsuit against Kello regarding their accusations in June of 2021. CleanSpark's revenue and revenue margins are highly dependent on the price of Bitcoin continuing to stay on an upward trajectory. If the price of Bitcoin were to significantly drop, this would adversely affect the company's main revenue stream. The company has yet to turn a profit. While CleanSpark's earnings per share has been steadily getting closer to turning from negative to positive, the continued reality of the company not yet being profitable could adversely affect the stock price. The four companies chosen to be comparable companies for CleanSpark were AnyChange Limited, Bill Identity, Bitfarms, and Veritone. All companies have operations involved with Bitcoin mining, yet they are not all energy-efficient Bitcoin miners like CleanSpark is. All the companies also have small cap market caps and have similar price-to-sales metrics. Zachary K. Bradford is the CEO and president of CleanSpark and has held the title since 2019. Bradford served as the CFO for the company from 2014 to 2019, when he was promoted to CEO. Bradford is also a managing partner at Blue Chip Accounting, LLC. He previously was the CFO for Epic Stores Corporation. The company's core management team is 50% female, and the board of directors is 100% male. Finding a valuation for CleanSpark was no easy task. In order to reach an intrinsic value for CleanSpark, a 5-year discounted cash flow model was constructed. Using a terminal growth rate of 1% and a weighted average cost of capital of 25.94%, an intrinsic value of $63.22 was reached. Additionally, a sensitivity analysis of 50 bips on the terminal growth rate and the WACC was conducted, yielding a range of $61.98 to $67.46. Next, a price-to-sales multiple valuation was calculated using a blended average price-to-sales multiple of 9.64x, resulting in an intrinsic value of $11.63. A price-to-sales metric was used because the company has yet to turn a profit. Finally, a price-to-book multiple valuation was constructed using a blended average price-to-book multiple of 15.98x, resulting in an intrinsic value of $17.38. A price-to-book valuation was used because this company's valuation is heavily based on its assets. By weighing these three models 40-30-30, a price target of $33.99 was reached, resulting in a 136.72% potential upside.